Okay, we've got Dan from Rockland County. How you doing, Dan?
Hi, Greg. How are you?
I'm doing fine. What do you got for me?
I was one of those people that Craig was just talking about. My wife and I, with a friend of ours, 50-50, bought an investment property in the Tampa, St. Pete area in 2006. Long story short, we now owe more than the property's worth, and I want to sell it. My partners and us would not qualify for a short sale. So I've sort of been bickering with my partner because he doesn't want to go through the credit risks with, selling it for less than it's worth, and I just want to dump it. And I'm not sure what to do. I don't know if your last guest could help me out. It's in Reddington Beach in the Tampa, St. Pete area.
Okay,
it's on the Gulf.
We should grab your phone number also after we finish the call here and put you in touch with Craig because he's got boots on the ground there. Mm-hmm. But in general, are you able to rent the place out? I mean, is there a tenant in there right now?
Yes, there is.
And how is that? Is that it's not covering the cost?
No, it's not. It helps, but it doesn't cover the cost.
Okay. Well, you mentioned that you don't qualify for a short sale, and what that means to everybody who's not sure is that you have to show some degree of hardship to be able to get a bank to take a haircut. And if you can't show that hardship, the bank says, hey, stick with it or sell the property and pay us the difference.
Right.
Which is always an option also.
It's for people who make too much money and they don't get any accommodation.
Yep, and that's and that makes sense when you think about it. The bank's saying, hey, we're not in the business of undoing people's decisions that didn't work out the way they had hoped. How much money are you losing on the property on a monthly basis? In terms of rent?
Is all the expenses versus rent about $1,800 a month.
$1,800 a month that you're losing. Okay. So the idea is that, and how much underwater are you in terms of what you owe and what it's worth now?
Well, because of these short sales, the prices have dropped immensely. We paid almost $700,000, and they're selling in the high threes now. And our mortgage is $560.
Okay, so the equation you're doing with your partner is if we're losing $1,800 a month, but if we sold the property short and the bank wouldn't give us a break, we owe $200-something thousand. Well, how many months of $1,800 worth of a loss would end up adding up to that shortfall? Because there's a good chance you have to write a check.
That's exactly right.
And the third option is that you default on it and you let it damage your credit, which I'm not a big fan of. The truth is, if you have the ability to hold this thing, it will come back in value. I know it's hard to believe, okay? But 10 years from now, it's going to come back in value. Your options are real simple. Default on it altogether, strategically default, and let the banks take it away and let your credit get damaged, but you're going to be out of the mortgaging market for 7 years. Okay, they're going to lock you out for 7 years. And so if you've got plans to buy real estate going forward, maybe you hedge this thing. Maybe you buy other real estate now, dollar cost averaging. Buy some more property now at the low point and try to blend your losses with gains, and undo the decision. If you bought stock at a high point and then it went down, one of the things the stockbrokers recommend is buy it at the low point and average your buy-in price with a better buy-in number.
Laddering.
Yep. All right, so listen, I'm sorry you're in a sticky spot there, but definitely give your number, and we'll get in touch with Craig and see if he can come up with some solutions for you.
Thanks, Greg.